talking Tesla and
Yeah, what's going
talking a
on?
number of things. Yeah, I mean, the stock goes up, the stock goes down. It's amazing what happens when markets are open. But I don't know if you have any commentary on the price action today, or just any of the news you've heard of late.
Yeah, I mean, there's when stocks go up or when they go down, I feel like, people want a reason for it. And I think the tricky thing is, and this is true for all stocks, not just Tesla, it's true for trading and investing in general. And, you know, it's important to manage expectations. And it's also important to understand when a move in a stock is because of a narrative shifting versus a fundamental reality shifting. The latter tends to be more sustainable and less volatile. And like the post earnings reaction we saw from Tesla from the last earnings report, I felt like was justified. There was a surprise to the upside on margin. There was a continued remarkable growth in the energy business. There was a nice beat on EPS, and I felt like the stock should have traded higher in the wake of that report, and it did. And those moves tend to be a lot more sustainable in markets. I think the move over the last week, 45% move to the upside in 7 trading days, is parabolic, frankly. And I think that most of it's probably not rooted in an immediate fundamental reality. Now, do I think there are arguments to be made that Elon has become magnitudes more powerful than he was just a few months ago, and that by virtue of that, there are regulatory tailwinds to Tesla and SpaceX and his other companies, and that he'll likely have, some degree, if not a large degree, of influence over the incoming administration, not only in terms of appointees, but in terms of incremental policy changes. I think all of that is true. And I think the stock should have traded higher following the election. Should have traded 45% higher in 7 trading days. That's hard to say. I mean, one thing that's characteristic of Tesla is that Tesla is kind of the OG gamma squeeze stock, at least in modern markets. I'd say over the last 10 years, Tesla's probably the best mega cap stock example for gamma squeeze. It's for people that don't understand equity mechanics, it is remarkably hard. And when I say remarkably, I mean like almost impossible. It's remarkably hard to squeeze a stock with over a 200 or 300 billion market capitalization, let alone a 600 plus billion market capitalization, which Tesla had prior to the election and then proceeded to go up 45%. The way you do it is by hitting the options chain in extraordinary volume, extremely far out of the money. And Tesla's blessed with a shareholder base of a significant amount of retail holders that are willing to speculate, and smart institutions that are involved in the stock know that there's a significant portion of the shareholder base that's willing to speculate. And so as a result of that, you have kind of had this unique scenario, mechanically speaking, for Tesla, where on incrementally good news or on any sort of inflection in narrative, Tesla runs a lot. This has been historically true for like the last 5 years. And the reason for that is just extraordinary options volume. To put this in context, if you take Tesla out of the equation and take NVIDIA out of the equation, so if you take just those 2 stocks out of the equation, U.S. single stock equities trade roughly $310 billion in total notional volume. That means the options on every single stock in the market combined trade roughly $310 billion a day. In the last 7 days, Tesla's averaged $150 billion in notional options volume every day. That is half of the entire U.S. equity market in one stock. That's the type of options activity that is going to create moves like we saw this week. And for those that traded or owned the stock back in 2019, 2020, 2021, the types of 1 week moves we would see back then. So, should people be surprised the stock was down 6-7% today after a move like that? No, you shouldn't be surprised about that, even if this wasn't a gamma-driven move. But because it's a gamma-driven move, the stock's going to be very volatile, and it has a shot to defend the levels if the market can hold up and if the market can continue to trade higher in the end of the year. We have a pretty big catalyst coming up for the overall market, which is Nvidia earnings at the end of the month. If those earnings are good, you can get a green light, and the markets, and Tesla included, can continue to rally. Those earnings are bad, I think you could see a broader sell-off in tech, and I think that would extend to Tesla too. But that's just speculation, right? I don't know for certain what's going to happen. That just seems like a reasonable scenario of events to expect. So, yeah, look, I think circling back to the initial question, people need to separate price action from fundamental reality, and also make sure that they can understand when those narratives are shifting. Let's keep in mind that the street, in spite of what was a pretty good quarter in terms of margin inflection, and in spite of what was, I think, a good outcome in the election for Elon in terms of his influence and power, there have been very few shops that have been willing to adjust their earnings estimates. And even Bank of America, who raised their price target considerably, probably the most out of the pack, they raised their price target from 265 to 350. It was mainly a narrative-driven note. There was no fundamental analysis in the note. There was no raising of expectations in the note. It was all around this idea of Elon's position now giving him regulatory influence, which would lead to tailwinds for Tesla. So there's two parts to the story. There's the speculative, incremental, narrative-based story, and then there's the actual fundamental reality of the company, which, those two narratives might be a year and a half apart right now. And as a result of that, the stock's going to be volatile while the market manages those expectations. But overall, I'm bullish. I think the outcome of the election was bullish for Tesla and for Elon's portfolio of companies in general. I think people just need to manage expectations when it comes to price action. Stocks can't go up 45% in a week, especially stocks of this size, and not see some sort of profit taking or selling pressure. That's very normal.
Stock Talk. If you were to compare Tesla to something like an Amazon before IWS, where are we in this arc of a move? And how would you categorize it? Is it just a election FOMO rally? Is it Wall Street? You mentioned not getting repricing data-driven type of upgrades. So where are we in your mind when it comes to this type of caliber move, $90 in a week?
Well, yeah, I mean, look, let's be clear. The street's been behind the ball in this stock for a long time. So, I don't want to give the street too much credit here to say they have to be on board for the stock to go up. They don't. I mean, for the parabolic run that happened 2019, 2020, they weren't on board. Most of the street was offsides. So the stock doesn't have to follow what the street thinks. That I want to be abundantly clear about that. But, Tesla is at this inflection point, I think, in the business where there is an emerging new class of business in terms of software and humanoid robotics, and that has not yet been fully realized, right? I mean, Tesla's making money on FSD. They're not making an inordinate amount of money on FSD, especially they're not making more than the core business of actually selling the vehicles. When that mix starts to shift, then you can say it is becoming an AWS moment for Tesla. And I could even say speculatively, that is their AWS opportunity is, and maybe even bigger than an AWS opportunity is humanoid robotics and software. But there's a transition phase that has to happen. Businesses don't snap their fingers and go, okay, we're going from selling cars and that being the business to this flourishing energy business and our all the potential we have on the software side and all the potential we have on the humanoid robotics side. Retail tends to be actually better at being willing to speculate on those things before they become an actual balance sheet reality. The street, it tends to be a little slower to jump on those balls. But Tesla's in that inflection point right now. And Elon is a master at managing narrative. There you go. I got the sentence out. Elon is a master at managing narrative, but the thing is that he's going to have to do that over the next quarter or two and be able to guide price by the story of what is changing, as opposed to, some sort of crazy turnaround in the fundamental reality. Like, we had a nice margin beat. We had, surprised the upside. I certainly didn't expect the margins we had last quarter. I didn't expect the EPS beat either. So I was pleasantly surprised. And we may have a few more pleasant surprises in the pipeline. Volume wise, it looks like Q4 is going to be great based on the incremental data we have. So we might have another decent quarter in Q4. But I think, outside of looking for these incremental beats on analyst expectations and saying like, oh, look, we beat by EPS on 10 cents, or, margins were 3 or 4% higher than expected. I think investors should remain focused on the core story, which is the transition of the business. And, if Elon pulls this off, which I think he will, and I think most of us probably have faith that he will, then this goes from being a story about slowed volume growth in deliveries to being a story about, accelerated growth in software and the dawn of a new humanoid robotics program with an enormous total addressable market. That becomes a new story, and the street will pick up on that when it's there, when it's available to them. But I don't know how many months away that is. It could be months away, it could be years away. We'll have to see. But we're in that transition period right now, and I think that's why people are tying themselves so passionately to the price action, because they're expecting the market and the price action to guide them on whether these things will or won't happen. And I think that that's just a bad way of doing things. I think if you're an investor in this company and you look at the stock every day and ask why it's up or down 7%, I think you're going to have a horrible time investing. And I say that for most stocks. I mean, if you're a person that like actually wants to invest in a company, if you look at the price action every day and why is it up? Why is it down? You're just going to go crazy and you're going to get more gray hairs than you need. So if you believe in the overall story, you stay in the stock. And that's kind of how I operate, at least.
That's what Herbert asks us every day. Like, why is the stock up? Why is it down? Just kidding, Herbert.
No, it's accurate. That's exactly right. So Stock Talk, if you were to guess, based on your experience, is it possible that like Wall Street learns the lesson and they go long because they believe the robotics, like the 10-10 event, and do they go long here, or anywhere, maybe after a couple of quarters? Like, what kind of green flag are you looking for where you go, okay, Wall Street gets it? Is it upgrades? Is it just fundamental
Earnings revisions.
EPS? Okay, earnings
revision. So the Wall Street operates on two kind of avenues of influence. The first is earnings revision. So every stock has earnings estimates. Some stocks have them multiple years out. Some stocks have them 12 months out. Depends on the stock, depends on the size of the company, how well it's covered, et cetera, et cetera. But stocks have earnings estimates, okay? And typically what happens is when opinions are inflecting on Wall Street, the first thing to move is earnings estimates. And after that, you start seeing what most of the public consumes, which is price target upgrades and downgrades and analytical changes. So to achieve the first part of that equation, to achieve the actual earnings revisions, you typically need some sort of fundamental evidence by which analysts on the street can speculate. So you don't need for example, let's just use the Optimus program as an example. Let's say Tesla was delivering 10,000 units of Optimus a quarter. Okay, that's nowhere near the scale that they're expecting to be, at scale with that program. But with that data, there would be analysts on the street who'd be willing to extrapolate those numbers with the expected growth of the industry and then assign a per share value to that portion of the business, and then add that per share value to their overall price target. And that's how you get price target revisions. For earnings revisions, it's kind of the same thing. They would model that business and then see what the downstream impact would be on earnings, and they would revise their earnings estimates up or down accordingly. We're not at that juncture yet, right? Most of the street is actually unwilling to model the Optimus program at all. Morgan Stanley did in their most recent note, but they did not add it to the base case model. So Morgan Stanley did an estimate. Sawyer tweeted it, a few other people tweeted it out, but they signed a value of, I can't remember what the number was. They signed X dollars per share to the
Yeah, like 485 or
there
whatever.
you go. Yeah, whatever the number was, but they assigned whatever $400 something per share for the Optimus program at some sort of medium scale. I don't know how far they projected it into scale, but so that's their initial analysis on what they think it might be worth. They're not going to factor that into their base case price target. The base case price target is what you see. That's what you see on the headlines. That's like what you see if you subscribe to a Wall Street news service. That's what everyone sees is the base case price target. Most firms will have a bull case price target or bear case price target as well. If you read the full report, which the vast majority of people don't because getting that information is pretty expensive. But if you read the full report, you'll see a bull case target and a bear case target. So in the Morgan Stanley report, they had a bull case target of 500 per share, a 12-month target, right? But their base case target was 310, which was actually below the price when they issued the report. So these dynamics are kind of confusing. Like if you're somebody that doesn't consume Wall Street research, you'd be like, "What? I don't get it. How are they overweight the stock, but they're reiterating a price target that's below the current price?" That happens all the time. It happens a lot more frequently than you think it would. And the reason for that is because sometimes analysts don't want to, there's a credibility aspect to analysis as well, right? Analysts don't want to put their name behind a price target that they don't think the stock can hit immediately or that they think is far-fetched. And so they'll be like, oh, that's our bull case. But our base case is, $200 lower, $190 lower, or whatever it was from Morgan Stanley. So long story short, what you need to see if you really want the street to be on board and upgrading the stock the way they upgrade the rest of the Mag 7 after every quarter, you need to see the forward initiatives, Optimus and FSD, actually inflecting on the top line. In other words, not immediately overtaking the car business, but showing a path to overtake the car business in top line contribution. When that happens, you'll get massive re-rating on the stock. Everyone will start repricing the idea of what they think the overall margins of the business should be. You'll get huge price target upgrades, et cetera, et cetera. But we haven't even launched the Optimus program yet, right? So I don't know. That's X months away or X years away. We'll see when it ends up being launched. But you have to at least launch the program and start selling units before the street's going to be willing to do that. So again, this isn't my opinion. I'm just kind of trying to share the way the street thinks and what the way they'll act. I'm still long the stock. I'm still bullish on the stock. But for people who are concerned about the ups and downs in price action, it's important to understand because Wall Street does move stocks. That they did, whether you agree with them or not, or think they're late or early, that's a fair debate to have. But they move stocks. When the entire street is bullish on a stock, it's 99% of the time it's going to go up. And so you have to win over the street's opinion over time. Elon knows that too. And for now, he's just managing the narrative and waiting until they have enough fundamental to get more serious analysts on the street, not Cathie Wood. To be fair, I don't really find Cathie Wood to be an elite analyst or ARK to be elite analyst, but to get serious analysts on the street who move institutional money, to get them on your side, you're going to need to see an initial fundamental impact from which you can extrapolate a larger fundamental picture, and we're not there yet.
Excellent answer, Stock Talk. Thank you so much. That's exactly the root of the question. Is not so much to, there's from my perspective, there's no concern of, when it happens or if it happens. I should rephrase. There's no concern of if it happens. The question for me is when. Since I'm a greedy capitalist and I want to try to time the options move, but yeah, there you go. So yeah, I think you're spot on, and ultimately it does come down to earnings, but the experience of seeing the breadcrumbs and defining what a move is, like what is this? What do you attribute it to? Is it just a Trump trade, or is it just going to be a pullback down to 300 or 270 and then continuation to rip into the all-time highs? Because some think that this company is undervalued despite PEs and PEG ratios. So what do you think is what are your thoughts on those fundamental analysis metrics that people or fund managers or Wall Street looks at?
I think if you're looking at this stock through the lens of the balance sheet, I think you're doing it wrong, would be my simple answer to that. And I think if you rewind the clock 5 years, I think prior to 2019, I bought the stock end of 2015, accumulated more, started 2016. So from started 2016 to 2019, I would say most of the movement in the stock was driven by the immediate fundamental reality. The investment case then was electric vehicles. We're in the age of electric vehicles. Tesla's the world leader in that industry. Volume growth is going to be enormous. And as a consequence of that, Tesla will grow deliveries at a huge annual clip. That was the investment case in 2016. That turned out to be true. Through 2019, 2020, Tesla took the driver's seat in the EV industry and delivered at a plus 50% CAGR year after year after year. And that's what initially drove the stock. Once volume growth slowed, the incentive to own the stock has to change. One thing people need to understand about equities is at the end of the day, it's about earnings. The company has to make money, right? And there is a huge gap for most stocks between we're going to make money. Look, we're going to make money. Look how cool this product is. Look how awesome this feature is in the pipeline. Look how amazing this software is. That's where most investors sit, in that area of hype. But between that area and we are actually printing cash flow is usually a wide gap. Sometimes it's a 10-year gap. Sometimes it's a 5-year gap. Sometimes it's a 2-year gap. And the incremental difference between those two pictures is where the alpha is, right? That's where the market finds its pricing and how stocks move. But with Tesla, I mean, look, this stock has not traded on fundamentals for the last 4 years. This stock trades much more on narrative than it does on fundamentals, and it's a reflection of the shareholder base to an extent, right? This isn't true with every stock. If you go pull up some random industrial stock that's been publicly listed for 65 years and has 85% institutional ownership, you'll find very little speculation occurring on that name. Those stocks move on one thing and one thing only, which is the earnings report. Did they beat or miss? What does growth look like? What does the margin picture look like? That's what those stocks trade on, purely, almost entirely in a vacuum. And so Tesla's not one of those stocks. Tesla doesn't trade entirely on the balance sheet at all. In fact, I would argue that that's probably maybe 10 or 15% of the contribution to the price action. Tesla trades on the narrative, the idea of these future industries that Tesla might unlock that might have hundreds of billions or trillions of dollars in value. And so as long as the stock can hover close enough to reality of those narratives maturing, then the stock will continue to go up. But when those narratives get called into question, right? We saw, for example, this is just a small anecdote. We saw when the robotaxi event got delayed, how the stock reacted, right? Because that's a narrative shift. That's the potential for like, oh, maybe these things aren't as close as we think they are. It only ended up being a couple month delay, but still the market was willing to spawn some hesitancy when that happened, right? And you see this very often with Tesla. It won't be anything about the fundamentals, but a headline will just come out about Elon, some lawfare campaign against Elon or whatever the case may be, and you see the stock reflect a reaction to that. And so yeah, I don't think the stock trades fundamentally, and I don't think it will for a long time. At least, as long as these initiatives in Optimus and software remain forward-looking initiatives, and they are for now because we're not there yet, right? We haven't solved FSD yet, and we haven't launched, a national robotaxi program yet, and we haven't, penetrated the humanoid robotics space yet at scale. So these things are all yet to happen. And I'm sure everyone on this panel, most people in the audience have a tremendous amount of confidence that they will happen. I personally have a tremendous amount of confidence that Tesla will be the leader in the humanoid robotics category. But like you mentioned earlier, the question is when. And the street cares about that too. They're not going to be willing to model something in that they think is 4 or 5 years out. And maybe it's not 4 or 5 years out. Maybe it's coming next year. Maybe by the end of next year, we'll have 20, 30,000 units of Optimus being sold every quarter, maybe more than that. That will change the fundamental picture, but we're just not there yet. And so you're in this awkward phase, the fork in the road that Elon put at Giga Texas. That's why I loved that so much when he did that, because that's precisely where Tesla is as a company. They're at a fork in the road where I don't think they care, frankly, about growing unit deliveries as much anymore. It's more now about transforming the business into a high margin business of robotics and software, and pivoting away from this identity of a car company. So, I think they'll do it, but it's going to take some time.
Great conversation. So thank you, Stock Talk. Those are really, really good insights. I think it's really helpful for people to think about, regardless of what position you're in. So it's great feedback. So we've added to the speaker board. And if you have some comments, please feel free to speak out. We're just honestly just talking about kind of latest news, anything that's gone on the last day or two, and what you see, in the future, in the near future for the company. So now I've seen Sat, Omar, Simon have come up. I don't know if you've anything new to share today. Thank you.
Yeah, hopefully my connection's good because I'm driving on FSD. Yeah. But, it's kind of interesting. I think in the past, retail has been ahead of Wall Street in the broader investment community. But this time I feel that Wall Street has actually gotten it before the retail investment community has. And most people are still in this place where they're saying, oh, it's not trading on fundamentals. It's ahead of itself. This new business isn't here yet. But, I'm literally talking to you guys as my car's on FSD. The new end-to-end on the highway is incredible. I just spent $8,000 buying this software just a couple weeks ago, right? So do you guys know that in the most recent quarter, they did more than $300 million for FSD based on revenue recognition alone? Do you know that last year, FSD generated more revenue than ChatGPT? This is, very much a serious business. I think obviously unsupervised is probably going to be 1,000 times more valuable, no doubt. But they're right now, I think, generating higher cash flows than any other self-driving service in the world. Nobody else really has a truly, unsupervised service. They all require monitoring to some extent. Tesla really has the most capable system in the world. It can do things that nobody else can do. They have the market for road trips, for example, entirely to themselves. This new end-to-end, it is amazing. It doesn't get stuck behind slow cars. It does so many of the things you'd want to do. And the no nag, they've got a really killer product here. And I don't really think about it as the new business and the old business. I just think about it as the business, right? Because, you can talk about FSD sales, but they are selling cars. FSD runs on the cars. The, robot, obviously, a lot of the infrastructure, the training cluster, the software behind it is very similar. They are headed into another growth wave in the business, which is to say the auto business and FSD. This growth wave is really driven by three things. One, the end of the EV hangover. Tesla, in the past few years, has been a victim of their own success. We've seen margins fall because the EV market's overcrowded, people dumping unprofitable EVs into the market. And it's made sense for these automakers, honestly, to avoid billions of dollars in fuel economy fines to just dump these unprofitable EVs on the market. That's all about to change. The EV tax credit's going away. Fuel economy standards are going to change. The EV hangover is ending. That's going to give Tesla more pricing power. You're seeing rates start to come down. They've already come down 75 basis points. That is likely to continue and eventually filter down into lower rates for consumer auto loans. Then you've got FSD. FSD is now ready for your average consumer. I've heard it from my aunt. I've heard it from my girlfriend. I've heard it from non-tech people. No nag, plus the fact that it requires so much less intervention, it's a game-changing product. The rollout of that in the US as well as Europe and China next year is going to contribute to margin expansion. And then finally, product. Cybertruck is ramped up a little bit. There's a lot more to go. Honestly, I don't think it's gotten to its full potential. We've just started making the 80K version. They've got a 60K version coming next year. The new Model Y, best-selling car in the world. New Model 3 is amazing. New Model Y is going to have all of that and more. You can bet there's a lot of people waiting just for that. New, more affordable models. Cheaper, a new entry-level Tesla. All of these will run FSD, of course. So really what I think you're going to see is margin expansion as a result of higher software sales, higher subscriptions, but also a shortage of vehicles driven by people's desire to adopt FSD. I mean, it's so obvious. The writing's on the wall that all cars are going to be autonomous. You have millions of rides happening that are driverless right now in the United States. And those three things really combined with, favorable government policy and more friendly government policy than before, I think are contributing to the start of a new growth wave. So for a long time, we've heard Tesla's in between two growth waves. With the launch of FSD worldwide and these new, more affordable models and the Model Y, we're heading into that next growth wave, I think, in 2025, 2026, particularly in the back half of 2025, when these new, more affordable models and FSD are actually deployed. And I think that's part of what the market's realizing. I think they're looking at this and saying, okay, this company is through the storm, essentially, and they've come out with a record amount of cash. They now have a seat at the table in the White House. This is probably, starting to be a story about expanding margins, expanding profits, lessening competition compared to before. And I don't think it's entirely just based on narratives. Money, the business matters. When you saw margin contraction, when you saw this brutal price war, it was reflected in the stock because it is to some extent still attached to reality. The valuation was still very high, but I think these things do matter. And when you see another growth wave starting, you see these policies, I think some of that is part of the story behind the last week's crazy price action.
Yeah, it's interesting. What makes you think that Wall Street has it before retail? Just the amount of shares moving?
Well, I talk to people who are professionals, professional hedge funds who aren't on Twitter. Some of them actually call me and say, hey, can we actually pay you to just answer some questions about FSD? And they're looking hard at this because they realize that this is a real thing. We're now in a place in the world where there are millions of driverless rides. There are cars on the streets without steering wheels and pedals. Most people haven't really caught on to this, but it's happening. And you talk to those guys and where their head is at, and then you talk to the average, Tesla retail investor, it is pretty sharp, pretty stark contrast, I have to say. Most Tesla retail investors are still in the headspace of, this is never going to work. This is never going to happen. I don't really believe it. They're confused. They're like, what's going on? Why is this happening? Whereas there are, I think, a lot of people on Wall Street who have been looking at this for quite some time. They've been researching the industry. They've been figuring out how to play it. And they saw a big overhang lifted. a huge amount of risk just based on the conversations with, 3 or 4 people who work in hedge funds, private equity, family offices. And they said, okay, well, NHTSA was a big question for us. Regulatory approval was a big question for us. What just happened in the election, it unlocks our ability to give them credit for a lot of the autonomy story where we weren't sure quite how you get federal autonomous legislation or what the time frame for that is. But now it's actually been moved up a few years.
That's interesting. Yeah, thanks for bringing it up. I didn't bring it up too. I'm getting calls too, and I think I understand exactly what you're saying. There's a lot more people poking around, asking questions, and wanting to have real dialogue about what's coming. What are we like? What can a consumer actually experience today? Like longer form question and answer, and what does it mean to the company? So interesting. Yeah, that's very interesting that you're seeing that as well. Thanks for going through that, Omar. It's really helpful. All right, let's keep going through. I see Prime. You've got a question, your hand up?
Yeah, do you hear me?
Yes.
Yes, perfect. So we were discussing regarding the Juniper and the 2.5 versions of the car. Is the vision that Juniper gets released and a 2.5 version of the Model Y gets released at the same time? And the following question for that is, would they clash, or would it be smart maybe making the 2.5 version of a car on the old Model Y factory line when changing to Juniper, instead of just selling off older versions of the Model Y that is produced while jumping to the Juniper line?
Well, so Tesla has, the Y is a very high volume vehicle. And I've talked about this on a couple of podcasts. Tesla has to do an even much better job of managing this transition, like from the old 3 to the new 3, the old Y to, eventually a new Y. By the way, we don't know. We don't know exactly what the timing for this is. It's not a foregone conclusion per se. But what's going to happen is they are going to phase down the old product, and they're going to ramp up the new one. I mean, that's going to happen. And I think that the 2.5 version vehicles you're referring to, I think those are different products. So I think Tesla's going to have multiple, new products, refresh products in the following year. And they're going to use basically this serial line flow, this serial general assembly flow in the factory, versus the upcoming approach to manufacturing where they want to get their process times down. They want to get more output per square meter. They want to utilize more of the factory floor space, and they want to go to this parallel on box model. That's a generation after these vehicles you're referring to. So I think there'll be multiple vehicle types coming in the next year. This is, again, these are our guesses based on all the information we see out there. We don't have any special or information that's not available to the rest of the public. But that's what I see happening with that. So they got to manage this transition very carefully from the old Y to new Y. That's one of the reasons, by the way, the company's been super quiet, and they should be super quiet on the Y, because the Y is literally 3.5 to 4 times the volume of the 3. So, get this transition right, it's going to be very costly.
Yeah, but the following question is, because they already tried to do the version they sent was selling in Mexico, could that be a try to just produce those models on the old line, or is it going to be the next step of the production line for the cheaper versions?
No, I think the new versions are going to be even lower than that stripped down Model 3. I don't think the new versions are stripped down vehicles. They've talked about the new vehicles. The new vehicles actually have a different architecture inside of them. They have a different battery module, different motor. They're pulling forward the modules from the unboxed next generation platform and they're pulling those modules forward, but they're going to use like their existing manufacturing line and methods. What they'll do is they'll go to the manufacturing line, they'll swap out some of the fixture specific tooling that actually makes contact with the product, but the overall kind of robotics and large CapEx flow will remain similar. And that's what they're going to do for this next generation vehicle. And what that does is that extends the CapEx from the 3 and Y and gets you greater volume leverage and depreciation time on that CapEx. So it gives them better operating leverage, and they can ramp the new modules from the upcoming generation, get those up the yield curve, down the price curve. And so when the next generation vehicle starts, you know, really the mechanical assembly and the general assembly is going to be kind of the new thing. The modules that feed into it or would have already been ramped and at a much more stable cost structure. So this is a very good de-risking move that Tesla's doing. And they broadcasted it. I don't know how many analysts picked up on it, but they broadcasted it. It's very clear. It's a highly de-risked approach.
I have one more question, and this is like just as I'm living in Sweden, if there's not going to be a Giga in Mexico due to the tariffs, if Trump adds them, is that only for cars that are going to be sold? I mean, if you produce like cyber taxis in Mexico, would that be like a cost to import them just to use for the company and not sell to customers? Does anybody know this?
No, I mean, Tesla has capacity in the United States right now. They've got a huge facility in Austin. They're adding to the Nevada site for semi and for other module. So they have the ability to increase capacity. They don't need this new variable. Think of like new product and new factory. Like if they did this next generation vehicle in Mexico, I think it would have been, it would have much longer time coming down the cost curve and going up the ramp curve. The approach that they've done here with, you know, doing this out of Austin and then scaling it to the other factories that already exist, that already have personnel, that they're already ramped up, that's a much lower risk approach. They don't need Mexico right now. They may need another factory in the future, maybe. But what Tesla's focused on is improving the efficiency in their output per square meter of their existing factories, and they've got on-premise expansion capability, like significant expansion capability, like the 5 million or more units, just in their current sites and just on the current land that they already have. So I know everybody's like just infatuated with this Mexico facility. It doesn't mean shit. We don't need it right now. I don't know why we don't need it.
Yeah, perfect. Well, it's a discussion that we read about. Yeah. So guys, thank you for answering my questions, Jeff, and everybody.
Yeah.
Take care. Yeah, bye.
Yeah, great question. Thanks. Elmar.
Yeah, so the new Model Y or Opal is going to be a huge transition, as you mentioned, Jeff. What I would do is honestly sell both of them at the same time, but we'll see how they manage that. That's going to be kind of interesting. What's really interesting about the new, more affordable models, I think they're going to make them in Austin, is I think if you have a new entry-level model, you can actually raise the price of the 3 and Y probably a few $1,000s, have your entry-level product actually be a little bit cheaper, but bring down the COGS such that your margin is actually comparable at scale. And that allows you to kind of tier out your products a little bit, as opposed to having 3 and Y be the entry-level models. I think that could be something that allows them to actually premium up the 3 and Y, differentiate them more from the entry-level models in the lineup. And I think Opal will be part of that. Elon did say in the past that Giga Mexico was really dependent on, the election. Trump saying he might, impose a tariff, whereas there's no tariff now. I think Trump is pretty clear that he wants people to build in America, not in Mexico. So that pretty much kills the chance, I think, of a Mexico factory over the next 4 years. They're likely going to be investing in Austin instead.
Yeah, agreed. Good question. Thanks, Prime. Thanks, Omar, for adding. Any other questions from the team? Maybe we'll take one or two more. Going once. Any other news today? Anything else that came out that was interesting that we may not have touched on?
Omar,
Waymo is now not requiring an invite to ride in Los Angeles.
Yeah, that was opened up. Yeah, I saw that. Interesting.
Jeff, I
They're
made a
expanding.
post. I made a post today, and I'm basically it's from, and I thought I would explain to people because some questions came back, and it's Rich Ross, who we purchase his ISI's research, and they're the #1 rated research firm in North America. They are not they're not on the buy or sell side. They are simply a research firm, and they have, I think, like 40 of their analysts are ranked like #1 in their category. And I post some of these things, and some people thought I was kidding that it was Ross Gerber. I got a bunch of jokes. So I just wanted to put it out there that when I post these things, this analyst. Sorry, I've got a 2-year-old yelling in the background. I'm gonna try and move away from her.
Run for safety.
Exactly right. But I'll put it in perspective, because when I post these, it's not, don't just take it with a grain of salt. This guy is the #1 rated technical analyst on Wall Street for over 5 years now. We're not talking just like he's a big deal, okay? And his calls have been pretty accurate. He's helped a lot of portfolio managers like myself judge their position and how they invest in certain companies. Now, I'm not taking all of his calls and in terms of like, are we going to own this stock or that stock? But it does help you look at entry, exit. Do I hold on? Where's the bottom on this stock? And he's done a pretty good job of it. So I post these, and today he just made a new post. He said, listen, this stock is going to 450. It has nothing to do with fundamentals. We're all here. We all understand the fundamentals of Tesla. I think. I think we all understand them quite well. And when I invest for myself or my clients, it's because I can't predict the day-to-day movement of the stock market or the stock price, but based on the valuation I'm looking at when I do my own research, it's a $2,000 to $3,000 stock over the next 5 to 10 years. Now it's a big target, okay? But if you keep that in mind and you say, well, how do you invest, today based on that outcome? That's a pretty good outcome. Then I come back to Rich Ross's technical analyst, and I'm looking at it going, where's good entry points? I don't know if there's any option traders in here. I don't know if there's people with new cash to put to work, or if people are thinking of using a bit of leverage and then increasing that leverage or decreasing the leverage based on the price. Everybody is doing a thing that works for them. So this isn't investment advice. But I do look at these charts, and I suggest most people do, or everybody does as well. And we're looking at, okay, short-term fluctuations. He does a pretty good call of it. So the pullback we had today in the stock price, personally, I'm looking at possibly a $300 bottom. We haven't sold any for clients on this run up. We've had a few clients asking, when are we going to be trimming? Again, $2,000 to $3,000 is our price target. So we're in early innings. And I personally, on a personal note, I've started nibbling again today on the pullback, and I think $300, according to some of the technical analysts by Rick, is probably a very decent entry point. So why do I share this? I'm not trying to pump the stock. I'm not trying to get people to invest. This is not investment advice. But what I've found in this space is people are quite intelligent at doing their own analysis of this company. But I've also found that it's been so difficult for Tesla retail investors that most people here aren't working with their investment advisor. And most investment advisors also haven't been trying to suggest to their clients to own this company over the last couple of years. But it's been really interesting to watch over the last month or so, the tone of the Tesla community very quickly to change a bit bearish and looking at taking profits, while Wall Street is looking to plow money into this in massive volume. So I'm just suggesting, not investment advice, that if you're long the stock, which I think most of us are, is to hang on. We're in this for quite some time. Don't take too much leverage. Be careful with the options. But I posted this today. Go check my post. And it's Rich Ross, top Wall Street technical analyst in the country for 5 years. You do with it what you want to.
Thanks, Simon. Xander?
Hey, Simon, how has your perspective changed from last night's 367, ooh, we're going to the moon, to today's punch in the testicles?
Early morning, in my own, again, we're long for clients, long personally. On this pullback, initially I thought, oh, okay. I started to nibble on a few call options personally. By lunchtime, I purchased the options were all down by 10 or 20%. I felt like I was kicked in the testicles. But by end of day, and I sort of looked at these technicals, I said, you know what? I think we all need this breather. I think the stock has run really far and it needs to consolidate a bit. And this is actually a gift because, and I've said this before, when the stock pulls back, it's a gift. If the stock runs back to 300, in my opinion, it's a gift and it allows us to, it allows the stock to consolidate. It's been overbought tremendously. And as it consolidates, it's going to shake off a lot of those technical, one-day traders. And it's going to allow us, I wish I had bought more calls or stock at 300. I think we all did yesterday. And today, so my opinion is this may be a gift. And if we're looking to reposition our portfolio or add or purchase some call options, that's what I'm looking to do. Because I liquidated pretty much all my call options as this thing ran. And I probably left a massive amount of money on the table. I'm sure most people did who had long call options. So this allows us to kind of start rebuilding a position.
Awesome, thank you.
Okay, Matthew, thanks for coming up.
Yeah, thanks for having me. I really appreciate it. I'm new to Tesla. I've only become a big fan. I've always been a fan of Elon, but I've really become a fan of Tesla over the past 6 months, big part to Omar and following his channel. One of the late breaking news that just came out, Trump has officially announced that Vivek and Elon are going to head the Doge to cut government efficiencies. And I think with the stock, I think so many people, and I live in Houston, Texas, so I think a lot of people don't understand what Tesla is. It's not just an automotive company. There's so much more to it. But what I find very fascinating is a lot of my friends, all of a sudden, I see them driving the Cybertruck. They're test driving the Cybertruck. They're starting to understand what FSD means. They're starting to understand the difference between unsupervised and supervised. And I think kind of like what Warren Buffett said, if you believe in a company, even if you buy it at 318 a share and it drops down to 300, you just keep buying because you believe in the company. And I truly believe in the company. So I just kind of wanted to get y'all's thoughts on Elon and Vivek being announced to Doge. I don't see a downside to that. I see a lot of people finally understanding how effective Elon is in his capacity. But also, I wonder with Elon spending his time at Mar-a-Lago with Trump, which I'm a fan of, does Tesla, are they able to continue his vision while he works temporarily with the government to fix it? And so that was kind of my question to everybody on the panel.
Yeah, I'm reading the announcement now, and yeah, they're saying not a federal agency. Interesting. And their work will conclude no later than July 4th, 2026. Interesting. That's the 250th birthday rate for the country. So I'll have to read through the announcement, but obviously it means a lot. When you look at how do you measure capital allocation, you look at the money going in, you look at the investment going in, and you look at the return coming out. And it's hard to select, to think of anybody that's actually been better at this in the last decade than Elon and his companies. And if you take this, this method of operation, which is, it really stretches across so many different things. When you run a company, right, you've got a product development R&D effort, you've got a sales and marketing effort, you've got a program management administration effort, you've got a manufacturing effort, you deal with suppliers of services and goods. This is the same things that governments have to deal with. And that's why when people think about, the federal, budget is $6 trillion and all of it's Medicare or this or that. So it doesn't mean you have to cut the program. I think people look at budget cuts of like, I have to cut the program, I have to change what's actually offered. What they're going to go in and look at is like, what's the labor involved? What's the process time involved to deliver the government service to the people? And they're going to look at anything that the government buys. My recommendation is anything the government buys, whether it's direct procurement, which are like goods, or it's indirect procurement, which are services and goods that are used to deliver a service. Those things can go under the same kind of microscope that Tesla puts their suppliers under a microscope, the multi-sourcing, the multi-bidding. How many no-bid contracts there are in the US government, such a very high percentage. There's so many things that can be looked at. And when you put a professional in there who's delivered results, it could be transformational for the country. And so, yeah, that's why I view it. I'm pretty excited about it. I think I can help with a framework, a way of thinking, a culture. And in terms of execution, I think, Vivek can drive that. And I think they'll do it with a lot of transparency. People are like, well, how do you do this and not have a conflict of interest? I mean, they could literally broadcast, their framework. They could make it transparent. They could broadcast their decision-making and make it all transparent, just put it out there. And then, let the people decide. But I think this is going to be, I think we're going to look back in history, and this is because right now we're cruising for a disaster on budgets. So I think we're going to look back in history and say like, wow, this is a turning point for the country. And so I'm super excited about it. I think it's very meaningful. I think this is elevated, Elon's profile, the most, important CEO in the world. He already was before that, but I mean, this is just further solidifying it. So I think it's a great thing. Sure, there's some questions.
I want to add one more thing that I think is very important. Elon talks about maximum transparency. So he talks about if I go into meetings, I'll put my phone down and I'll live stream it on X. And I think that's great. And you look at the Senate coming together tomorrow to put together a majority leader going forward, and it's going to be a secret ballot. And I think so many people are waking up to the fact and the importance of transparency is the most important thing for all of America going forward. And there's obviously a lot of folks that are not on X that we're able to text links to let them know and show them the source code. And I think that battle is brewing. And I hope that Elon does not take too much of a hit, because he's kind of come out for the Senate, the Senator Scott out of Florida to lead the Senate. And I like that choice. I know John, I don't personally know John Cornyn, but being from Texas for a long time, John's disappointed us. So I think that that will maybe enlighten people to how Elon thinks. And I would think that in his business, obviously, he does the same thing. And so just a point that I wanted to bring in.
Yeah, and I think, without going too far into that side, the only thing I would say too is on the risk side is, I mean, Elon's going to get attacked relentlessly. You're talking about a federal bureaucracy with hundreds of thousands of people. You're talking about a way of doing things. There's people grifting off of this government. If you look at the zip code around Washington, D.C., and you look at the income, the average income around, it's like unlike anything else. And they actually don't produce a product. They're selling influence. They're lobbyists. They all live in that area. And so all that's going to get disrupted. You're going to see some of the most vicious and vile attacks. And I hope he's got Secret Service protection. I hope all that's getting ramped up. And you're going to. The downside of this is you're going to see a very kind of a negative backlash from the conventional installed media and bureaucratic class. But
No, you're exactly right. And what Elon did with the America PAC, he literally took out the consulting class in America, because what happens with political consultants, they go out and they want their candidates to raise as much money as they can, but the needle doesn't move. There's no accountability. Elon puts together the America PAC in, I think, 90 days. He hasn't put it together that long, and comes out and increases voter turnout in Pennsylvania by 200,000 people with $50 million. So you're exactly right. He is a threat to the grifters in all parts of government.
Yeah. No, thank you, Matthew. Thanks for bringing that up. I think it's super important, and thanks for joining the speaker board on that. Are there any other last comments? I think it's an interesting announcement that just came out. It's not surprising regarding Elon's role in the government. Maybe everyone can have some time to read through that. Omar?
Yeah, these types of questions tend to come up when Elon gets involved in a new project. When Elon was involved with Twitter, when he did that acquisition, we heard a lot of similar questions about his involvement in X and whether Tesla would be compromised. I think, Tesla's obviously still the number one EV maker on Earth. FSD putting out some of the most impressive updates yet, the Cortex cluster. I think it's safe to say okay as a result of the acquisition. I mean, this guy's launching rockets, doing robo-taxi events, doing brain chips and monkeys, all while being on the leaderboard of Diablo and electing a new president. I don't know how he operates, but whatever he does, he seems to have a way to manage these projects in a way that doesn't compromise any individual one of them. And I think that'll continue with his new role as part of this Department of Government Efficiency. And ultimately, if the federal government has fiscal stability, it has downstream benefits to his own companies.
Great point. Thank you. Sat, why don't you close us out?
Yeah, I just wanted to say that Elon working with Trump is basically the solution that the president has never done before, where presidents could cut spending and then say, hey, bottom line got better or whatnot, but he wants to cut taxes but also make it more efficient. So you're making it leaner, so you're still not losing programs. It's not sacrificing the social programs or other programs in the government projects or funding for your infrastructure. You're trying to be more lean, just like an actual business. And who else do you want to hire than the most capital efficient automaker? And he's proven it over time and time again. Less than a year, 10 months, he's already made the Cybertruck profitable. And that kind of stuff is going to be really important to translate over, and then working with a collaborative government. And I think that's why people are much more hopeful, because of the collaboration that you can see that Trump is trying to bring into office. And Elon is obviously doing multiple things. He's actually added more, because before 10, 12 years ago, he was doing quote unquote just $2 billion companies with SpaceX and Tesla. And now he's doing 6 plus government and Diablo and whatnot. So I think he's perfectly fine. There's a lot more lieutenants in his companies that are really great executives that have done great stuff for many, many years.
Yeah, he's elevated them over the last half a decade or so, and even recently, 4 of them in the last month. So yeah, definitely been growing talent inside of all his companies. So it's great. So obviously a lot of news that's popping out tonight. But thank everyone for their time and all the questions and great conversations. Follow the host, follow the speakers, Herbert, Alexandra, myself, Simon, Sat, Omar, Stock Talk, Xander. Thanks, Matthew, Prime, for the questions. Do this every Tuesday at 5 Central, and we'll talk again soon. I'm sure there's a lot going on. Thanks, everyone. Have a good night.